Well, I just hit record. So, welcome to the grind. I'm your host, Mike, here with our very special guest, Trevor from Physicians Mutual. He's going to talk about innovative Plan G. Before he starts, though, just a reminder, we've got some top golfs coming up. I believe we got Physicians Mutual coming to some. We're going to have carrier reps there. They're going to explain their products. We're going to talk about stuff we have at Gordon Marketing. We actually will do some Top Golf. We give out drink tickets at all these. Then on the second day, so give you an example, March 31st will be in Little Rock, Arkansas. April 1st, we do a second day of Top Golf where we actually talk about how to do all this stuff. So day one is what you should be doing. Day two is how to do it. So it's less product, more process. We're excited to do those. We've done a handful of them already, got fabulous feedback from agents. So if you are in any of those areas coming up, if you go to gordonmarketing.com, you click on events or hover over events, go to Top Golf Symposiums. You can register right there. It's free to attend either day one or day two. Do you need to care about golf? No, I don't care about golf. I don't own any ugly pants. Last time I went golfing was 1996. So based on golf rules, I'm a professional because lowest score wins. And I've got a very low score in that case. So there you go. Am I going to Schaumburg? I'm trying to because I want to get a Lou Malnati's pizza. So we'll try and do that. But I want to kick this over to Trevor. So I stole his headshot from LinkedIn. That's what he looks like in a suit, but in a much better suit. There he is live. So, Trevor, the floor is yours. Go, give us the old razzle dazzle.
Absolutely, brother Mike. I appreciate it, man. As you said, kind of met you out there, out and about on the carrier side, and now we're on the same side, man. Now we're on the same side. So, really excited to be here, guys. I can certainly vouch for the Top Golf events. I was able to make it out to the Houston event. And it was absolutely fantastic. Absolutely loved it. Don't think I'm going to make any more of the Top Golf events. You know how it is on the budget side, Mike. So trying to save up that budget so I can get out there to Fishers for you guys pre-AEP kickoff at some point later on in the year. But you got me live now. So let me go ahead and Mike, if you could help me just monitor the chat and the Q&A. That would be great. Let me see if I can.
Absolutely.
So it is saying I can't share my screen while you're sharing. Can you unshare? And you are muted, Mike. I'm assuming you're just mumbling.
Of course I am. Yep, I'm just mumbling away. Let's see. I'm going to just stop sharing and let you share. There we go. So stop sharing. Now take it away.
Perfect. All right, guys. We see Physicians Mutual big and bold on the screen. Excellent. All right, guys. So welcome, Trevor Braun here with Physicians Mutual. Definitely noticed some of the names coming through on the chat and then the participants. We are almost up to 100, man. This is freaking awesome, Mike. Attaboy. There's nothing more miserable than getting on one of these and there's like one or two agents. You're like, man, you're wasting your time and mine. So way to bring the heat, brother. I am very, very impressed. I appreciate the heck out of it, but I would expect nothing less from my man, Mikey G. All right, let me hide this little share button. All right, guys. So this is our current product availability map, affectionately known as the Tic Tac map. As you can see, we do have product available all over the United States. We are going to focus today on our MedSup, particularly our most innovative MedSup, which is going to be notated by the black Tic Tacs. You can see that is offered through Physicians Select, one of Physicians Mutual's two subsidiaries. We also have the red Tic Tac in Utah and the orange Tic Tacs in Florida, Georgia, Kentucky. Those are offered under Physicians Life. So there was some questions regarding, is the innovative in Virginia, is the innovative in Florida? Excuse me, sorry. I think that was the only state-specific questions. However, what we are looking to do, what we have already done is we have filed in all of the states that we are currently in with MedSup, along with a handful of others like Virginia, possibly West Virginia, Michigan, DC, Maryland, So we filed in several of those states. We've also refiled in states like Kentucky, Georgia, Florida, all to move back under the Physicians Mutual paper to kind of have it congruent with all states instead of having different portfolios here and there. Of course, we're always at the mercy of what the individual departments of insurance approve. So fingers crossed, guys, we will have the innovative in every state possible. And the innovative is also, according to our lead actuary and product guys, going to be priced to be the lowest Plan G in all of the markets that we are in. So going to be very, very cool. That's looking for July. We've also got several states. We're going to be rolling out a new final expense product in coming up here in May. We will have kind of a phase 2 later on in the year for those states that we don't implement in May. But it's going to be a base final expense, whole life product as low as $15,000 up to $100,000. And it's going to have a term rider option. Which is going to be really neat. So be able to have a little perm blend or perm term blend, should I say, in that final expense market with some pretty unique bells and whistles. So be on the lookout for more about that as we get closer. But without further ado, let's move into the innovative. All right, guys. So I think as we're all aware, because we're in the space, the Medicare space is under a lot of pressure on both sides, both the MedSup and the MA side. We're seeing a lot of changes. We're seeing PPOs pulling out. We're I believe, going to continue to see some ancillary benefits go by the wayside just because of some of the financial pressures MA is under. Of course, PDPs, non-commissionable, PPOs, non-commissionable, historically high rate increases on both the G and the N blocks that I don't see necessarily slowing down at any point, even with some big rate increases last year. I don't know of any carrier that is actually profitable on those plans. And when I say profitable, talking about those loss ratios with most carriers still exceeding 100% on G's and a lot on N's, meaning that they are losing money for every single dollar in premium that they are bringing in. All of that to say, guys, if you're not comfortable with cost sharing plans, I urge you, get comfortable. If you're not comfortable with fact finding and cross selling, I urge you, get comfortable. If you're not comfortable with annuities, like Mike was throwing a plug in earlier, guys, get comfortable. Get comfortable. These are conversations that you can be having at the kitchen table or over the phone with your customers who need more than just the MedSup. The days of us simply walking in, being an order taker for a Plan G or for a particular Medicare Advantage plan, guys, if you want to stay profitable in this business, those days are over. Okay. So that is my soapbox moment on cross-selling and diversifying your portfolio, which is, by the way, for all the Top Golf events that you guys are doing, Miss Erin, Randy doing a great job. And I know that diversification of portfolio there is a major, major theme because you guys got to get paid, and with a lot of folks not paying you, you've got to figure out other ways to make up that income. And, cross-selling, fact-finding, getting comfortable with these cost-sharing plans to be able to open up more wallet share for those cross-sales. Guys, it is imperative. Okay, enough about that. So everybody on this call, I am assuming, is very familiar and very comfortable with the standard Plan G. Of course, the standard Plan G has kind of been the gold standard of comprehensive Medicare supplements ever since the Plan Fs went by the wayside for newly eligibles January 1 of 2020. So I want to, just make sure, again, the only thing that the customer is going to be responsible for there with the traditional Plan G is going to be that Medicare Part B deductible, which for 2026 is $283. Hopefully, most of you are at least comfortable with how the high deductible G works. I do plan on both for the high deductible and innovative G, giving you a little bit different train of thought and a little bit different verbiage that I certainly do believe will help you to not only position it in your mind, but to feel more confident and comfortable positioning it in the customer's mind. So the high deductible G is still a plan G. It's just a plan G with a plan deductible. Now, that word deductible is often viewed as, well, I have to pay all of that before anybody pays anything. But when it comes to the relationship of original Medicare and Medicare supplements, that's just not true, right? Because original Medicare is primary, the supplement is secondary. So a nice little mind hack here. Position it more as an out-of-pocket maximum, right? People are used to the concept of an out-of-pocket max, where you have your deductibles and coinsurance under Medicare A and or B, and the customer would be cost sharing with those deductibles and coinsurances up to an out-of-pocket maximum or a stop loss of $29.50. Okay. Now, that particular plan deductible out-of-pocket maximum does reset every year. Carriers do not set that individually. That is going to be set by Medicare. Okay. So with that being said, I've never seen it go down. I have seen it stay stagnant. And of course, we have seen it increase a little bit. I will give you guys a slide on a little historical perspective here coming up in a few. Now, although the high deductible G is going to be the lowest cost premium wise for any Medicare supplementary carrier out there offers, it also has the most cost sharing, right? Because not only do they have that high deductible for this year, but that plan deductible will reset every single January 1st for the life of the policy. Okay. So some people may really like that concept. Others may like the concept with the exception of the fact that they just don't know what their later years may hold from a health perspective, right? Typically, our bodies are nothing more than machines designed by the ultimate mechanic, right? So the older we get, the sicker we get, the more stuff falls apart and the more expensive it gets to fix. So that concept is really where the innovative was born. Okay. The innovative is not a new plan to the market, guys. A lot of agents think that it's a new plan to the market simply because Physicians Mutual was more of a career captive company up until a few years ago. So it may be a new toy for brokers, but Physicians Mutual agents have been enjoying this plan since it was patented in 2008. Okay. So we've got 18 years of data and of experience with this innovative concept. Now, if you look at it side by side with the high deductible G, it looks identical other than it's shaded a different color. That's because the innovative is really a hybrid between the high deductible G and the standard G, where it starts out as a high deductible G, works the exact same way, cost sharing with Medicare's deductibles and coinsurances up to that out-of-pocket maximum of $29.50. The difference is that the innovative's plan deductible actually disappears. Okay. So January 1st, following the second policy anniversary, the innovative plan G's plan deductible will go away, converting it overnight to a standard plan G for the rest of the customer's life while maintaining a discounted premium for life. So view the innovative as a temporary out-of-pocket maximum for a lifetime discount on full plan G benefits. Okay. So one of the first things we need to wrap our heads around is exactly the length of deductible period. Okay. So the plan deductible, the easiest way to think about it is they will have that plan deductible from whatever their effective date is through the end of that first year, followed by the next 2 calendar years. So we could have had 12 different examples here, 12 months out of the year, right? I think you guys can fill in the blank. Basically, regardless of the effective month, if the effective date's in 2026, they would have their plan deductible for the remainder of 2026. It would reset again January 1 of 2027. They would have it all of 2027. And then it would reset again January 1 of 28. They would have it all of 2028. But January 1st of 2029, that customer would wake up with full-blown Plan G benefits for the rest of their life at a discounted premium for life. All right, so I see a couple questions on Medicarians. Unfortunately, I will not be there. I'm glad Mike will be, but we will have a booth over there. Some of my counterparts will be there. So you guys make sure to stop by, grab some Physicians Mutual swag, and tell them how freaking awesome Trevor Braun is. Rick Bronson, can one use the birthday rule to go from a traditional high deductible to an innovative? Chances are not, Rick. Because in most states, the birthday rule indicates you can go from a plan of equal or lesser value. And the Innovative G is technically a Plan G. It just has the deductible discount rider, which, by the way, kind of stealing my own thunder, but that plan deductible can be removed at any point during that deductible period without having to go through medical underwriting. I'll reiterate that in a moment. Yeah, Tim, I will get this whole slide deck over to Mike, and he can distribute it out to you guys as long as you make sure not to use it in presentations. Agent training use only. Rick, yeah, I typically don't like to answer commission questions on these just because sometimes we'll have a mix of direct paid GA agents and LOA agents. So if you want to shoot me an email or a text on the side, or you just want to get with your folks at Gordon, we can certainly get that answered for you. We had one in the Q&A. Happy St. Patrick's Day. Thank you, Linda. Happy St. Patrick's Day to you as well. All right, guys. So I'll just be pausing as I can. Of course, Mike, if I get too carried away and the list gets too long on questions, just stop me, bro. All right. So the whole point of the Innovative, guys, is to help the customer to control those premium costs for life, right? Again, I mean, I know on the MA side, you get all kinds of questions and concerns and angry customers. Typically, the only time we get phone calls as Med Sup agents is when there's a rate increase, right? Or when that rate gets too unaffordable. And that's really the whole premise behind the Innovative, is to keep that rate as affordable as humanly possible, as long as humanly possible, while them still enjoying those full benefits of the Plan G in those later years. Okay. Again, high deductible G become regular G benefits. We just saw when that plan deductible goes away by several different examples, and putting you in control. That's where I was kind of, answering Rick's question, where it has a back door, it has a safety lever, right? So that could be another thing that customers are concerned about, even though the deductible is not for the life of the policy. What if something happens in the first 2 or 3 years? All of a sudden, either my finances change, just my comfort level with the plan deductible in general changes, my health changes. Say I get diagnosed with cancer or something, I'm going to have some lengthy, expensive extended treatments, things like that. Could be a jillion different examples. Whatever the reason is, if at any point during that first 2 to 3 year period, that deductible period, out-of-pocket max period based on that effective date, that customer wants to remove the plan deductible, they can do so with a simple letter to home office, and home office will put them on a regular G the first of the month following the receipt of that request. Okay. And again, it'll be done without any medical underwriting. So there is very, very, very little risk on the customer with that Innovative during that plan deductible period. Of course, it could be something sudden, an automobile accident, a heart attack, something like that. So it's kind of a get sick or get sick fast or get sick slow, immediate claims or future claims. And then still it warrants a conversation with the customer, even if you have a heart attack and you max out your deductible and you're in March, does it make sense to go to the regular G? Or being that you've already maxed out your deductible for the year, just stay on that and see where you're at towards the end of the year to see if you want to convert over next year based on your health. So definitely gives you an opportunity to have more of those touch points and more of those conversations with your clients as well. Okay, let's see. Is a plan available on Flores in the underwriting plan app available for agents to go look at today? Veronica, it is not available in Florida at this time, hopefully in July. And is there underwriting So if you're contracted with us already, you should be getting our email invites for our weekly trainings every other week at 3 o'clock on Tuesdays, 3 o'clock Central. I do go through our underwriting training, but certainly reach out to Mike if that's something that you want. I can get that to you, no problem. Okay. All right, guys. So really where the rubber meets the road is going to be the premium savings. Okay. Now, this is not necessarily any one of your particular markets here. This is just looking at an individual market. But the spread is typically going to be between 25 and 30%, depending on the market. Some may be a little bit more when you're looking at the innovative G versus the regular G. So we are making a couple of assumptions here. We're making an assumption of a standard rate increase down the innovative with the same percentage affecting the regular G over this 15-year period. We're also making an assumption that the individuals are going to live to age 80, which, using national averages, those that make it to 65, average life expectancy 80, give or take a little bit. So we feel that that is pretty fair as well. We also feel that it's fair to show the same rate increase percentage on the innovative G and the regular G. One thing I'll tell you, the innovative G is never going to have a higher rate increase percentage than the regular G, simply because it's a much healthier block of business. The innovative G is usually separated out by a lower rate increase than the regular G because of that fact. However, in some years, we do couple them together for one of two reasons. Either we need to take a slightly higher percentage on the innovative to offset drastically high claims cost on the regular G, or the more common, we lump them together because we simply don't have the 65 cents on the dollar, 65% required medical loss ratio on the innovative, because that block of business is so dang healthy. With that being said, what we are looking at is the example of twin sisters. All right. So let's fast forward a few years. We got Mary Kate and Ashley Olsen. Everybody remembers Full House. They are turning 65. Those are like the only real, twins I know. Maybe we could have used the Williams twins, but well, they're not even twins, I don't think. Yeah, maybe not. Okay, we're going to stick with Mary Kate and Ashley Olsen. They're just sisters. So you're all geeked up, man. You came through this training. You're loving Physicians Mutual, and you sit down with Mary Kate and Ashley Olsen. Mary Kate takes the innovative. Ashley takes the regular G, and they're both happy, right? So where agents view this wrong, in my opinion, and again, we don't have a crystal ball. We don't know how long these people are going to live, right? But if we're using national averages, okay, if an agent looks at that first year of savings and says, why in the world would I expose my client to potential $2,950 out of pocket to save them $439? That just doesn't math. All right. I'm in Louisiana, which we're like one of the two dumbest states. We always compete with Mississippi. So even for a Louisiana boy, that doesn't necessarily math. Guys, this is a long-term play. Okay. You can't look at the first year, 2, even 3 years when the plans are different and negate the next 12 to 13 years based on that effective date of when the plans are identical in benefits, right? Because regardless of the effective date, by the time that these ladies are 68 years of age, they both have full Plan Gs. And so if they both live out to age 80, for 12 of the 15 years that they had Physicians Mutual, their benefits were identical. So then we look down in the bottom right, that beautiful St. Patrick's Day green total savings column, looking at $11,287.07 in savings over that 15-year period. Okay. Now, if we go back, let's just round it up to 3,000, because again, I'm not great at math. Let's just say 3,000 times 3, that's $9,000. If Mary Kate maxed out each of the first 3 years of her innovatives plan deductible, she's still ahead over $2,200 in savings. Okay. Now, again, this is just an example. Is everything going to work out just like this perfectly? Not necessarily, but I think that you get the concept. It is a long-term savings play. Temporary deductible, lifetime savings on those full Plan G benefits. Okay. So moving on. All right. Again, I kind of broached this earlier when we were talking about the high deductible and the innovative. Is it really a deductible? The answer is yes, right? But again, it is a secondary deductible because Medicare, when you have original Medicare and a supplement, is always going to be primary. Okay. Always going to be primary. So, with that being said, we also need to make sure that we are well versed in how original Medicare works by itself, right? We have to make sure that we understand how the Part A deductible works, how the Part A coinsurance works, whether it's in the hospital, skilled nursing facility, how it works with blood, home health care, hospice. We need to understand how the Part B deductible works. We need to understand how the coinsurance works once someone's met their Part B deductible. All of that is important. Okay. So if we're looking at a Part B bill, let's assume that the customer's already met their Medicare Part B deductible. Medicare approves $1,000. Is $1,000 going towards their $2,950 out of pocket max? No, right? Because once somebody's met that Part B deductible, what percentage of eligible covered charges does Medicare cover? 80%, right? So 800 of that 1,000 is being immediately eaten by Medicare, leaving $200. Okay. So this is just an illustration that it would take a heck of a lot of doctor's visits, just nickel and diamond Part B. I'm sure we've all seen, Medicare EOBs. Most of it is just very small Part B charges, right? Just that 20%. And not only 20%, but 20% of the Medicare approved amount, which I don't want to spoil my little game later. But the Medicare negotiated rates on services is drastically lower than most people realize. Okay. So again, secondary deductible, more is an out of pocket maximum. Okay. All right. There you go. Yeah, that's good stuff, Mike. All right. Throwing out some knowledge. So to Mike's point, guys, will I be out $2,950 every year? Maybe, but probably not. Again, this is a little slide made up of right at 18 years of internal claims data we have since we rolled this plan out in 2008, showing the average out of pocket per year is $518. Over the first 3 years, 1553. 97% of folks do not meet that out of pocket maximum in year one, and 82% of folks never meet it in any one of those first 3 years. Okay. Again, it just by design attracts a healthier client. Our internal people have joked since its inception that the plan deductible and the innovative is the best underwriter we've ever hired. Our medical loss ratios on our innovative product is actually less than our underwritten business, which is wild. Because you think about it. I mean, you've got somebody that's got something major going on that's turning 65. They ain't going to take the high deductible or the innovative. They're going to go straight to the G or the N, right? So automatically, that's getting pressure right out of the gate. So with that being said, also, if somebody has something major going on, they might jump ship from the innovative and go straight over to the G, which further takes some of that unhealthy pressure off of the innovative, not to mention the fact, of course, in those first 2 to 3 years, we are insulated from the first 2,950 in claims. Okay. All right. Let's see. We had a couple in the Q&A.
Yeah, I was going to say there's a couple in the Q&A about rates and upper age limit.
How you been, Jim? All right. Will the innovative G premium rate stay significantly lower for life? App 70 plus clients are typically premium basic $300 a month. Yes, it absolutely will. Again, Jim, by design, looking at the slide that I showed earlier. Okay. Yes, by design, it is always going to be lower than our regular Plan G. Okay, by about 25-30% for the life of the policy. And Jim says, what is the upper age of the innovative? I'm assuming you're asking what is like the maximum issue age. Yeah, as far as I know, man, we'll go up to at least 99, maybe further. But yeah, it doesn't cut off for our MedSup products at any younger ages. All right, so I think we got that out of the way. All right. Do I just click answer live and it'll go away? I don't know. You bet, Jim. All right. I don't know. It's still showing up there, but okay. This is all new technology. I'm a WebEx guy. All right. So looking back, will it be 2870? Last year it was 2870. This year it's 2950. So it kind of answers its own question. I should probably update that. But looking back to 2008, the innovative and high deductibles plan deductible was $1,900. Okay. Back then, the Part B deductible was 135, and the Part A deductible was 1024. Kind of an aside, one of my really good friends, one of our agents, Gleb Ostrovsky out of Mississippi, actually went and searched, and he is an absolute Medicare nerd. And actually, I can't remember if it was on eBay somewhere, but he found the original Medicare and You book, the very first ever edition of Medicare and You, which I thought was pretty neat. Being a Medicare nerd myself, right? We all should be, because that's how we make a living. So I thought that was pretty cool. I just thought I'd throw that out there. But yeah, just to give you a little historical perspective, I mean, even over the last, 18 years, it just this year eclipsed 1,000 over the year. Do you foresee Physicians Mutual offering innovative Plan F for those individuals? So we actually used to have an innovative F, Peter, for those that are available, or for those that are eligible prior to January 1 of 2020. I know some states still do offer it in our quoting, but it is not very well or widely offered. We really kind of jumped to the whole G, high deductible G, innovative G concept when we were approaching 2020. It just makes a lot more sense. All righty. Oh, the game. Goodness. All right. So let's talk a little bit on the Medicare's negotiated rate. Okay. So I know many of you out there, and I'm actually going to be doing a training this afternoon on it, but when I'm talking original Medicare versus Medicare Advantage, I go through a lot of the different highlights on both sides. Make sure that agents are really talking about, the concept of freedom and control to the client whenever picking what side of Medicare they want to choose. And then I will get on Medicare.gov, and I'll actually have it on two screens, but I will get on Medicare.gov, and I will have one screen pulled up with like the Find the MA tool, kind of like you would with the Medicare Part D, and I'll pick an MA in my area. And then I'll have another screen open with Medicare.gov, and I will have it open to something called the Procedure Price Lookup tool. I'm not sure how many of you are familiar with the Procedure Price Lookup tool, but on Medicare.gov, you can actually go on there and either by typing in the name of the procedure or the CPT code, you can actually look up several different common procedures and see what that procedure would cost under Medicare by itself. Now, I am not advocating for folks to run around out there without a supplement. But what I do want to show is what that would look like for someone who was on that high deductible or on that innovative and still have some left on their out-of-pocket max. So really quick in the chat, because y'all have been nice and responsive. Let's see. And again, I know it varies by plan, varies by area, varies by HMO, PPO, but what would you say is the average out-of-pocket for an MRI on an MA plan? Type me a little number in the chat. Don't all go being shy now. $200, Rebecca says. We got 200. We got 350, Steve. All right, so that's a good range. Let's say between 200 and 350. All right. Now, what would you say an MRI cost for someone who is on original Medicare without the supplement? Just original Medicare by itself. All right. Rick says about $500. Mike says 70. That's quite a range. Donna says 375. Dang, Gene's going for the high at 1,500. All right. So I gotta say, Mike was about the closest. Check that out. So under the procedure price lookup tool, you can see www.medicare.gov/procedure-price-lookup. An MRI, okay, imaging, spinal canal, and contents with contrast. Ambulatory surgical center is going to be about $55 out of pocket, and the hospital outpatient is going to be there you go, Mike, is going to be $92. Now again, these are national averages, but think about it, guys. The Medicare negotiated rate is drastically lower because it's like the biggest network, outside of maybe Medicaid, even though maybe not technically a network, but you get my drift, right? Versus underage, whether it's group or individual. And then you're only talking about having to come out of pocket 20%, assuming you've already met your Part B deductible, of that Medicare's negotiated rate. So it tends to be drastically lower for everybody other than Mike. Well, actually, the two Mikes had the lowest guesses, but drastically lower than a lot of people think, right? So again, having an MRI on a high deductible or an innovative is not nearly as scary as most of you guys were thinking coming into this. Okay. Let's look. We've got some different examples. We've got an ultrasound. All right. We've got a tumor removal through a colonoscopy. Okay. We've got a chest x-ray. I mean, you can't get a freaking pack of gum for $4 anymore. You can get a chest x-ray at an ambulatory surgical center under Medicare, though. Okay, arthroscopic rotator cuff repair. All right. And then a arthroscopic knee meniscus repair. So again, just some examples, some common procedures out there. Go mess around with the procedure price lookup tool. This can certainly be very, very helpful whenever you're doing some of your own research or whenever you're visiting with clients. It's going to make you look super smart too. Okay. Now, one other thing on the MedSup I did want to mention is preventive care. Okay. Not only preventive care, but I'll also talk silver and fit. Now, this particular benefit is a little bit different in some markets. Some markets, preventive care and silver and fit are automatically built in. Some, like Pennsylvania, for example, doesn't have the preventive care, but silver and fit's built in. Most markets is going, including Indiana, is going to have preventive care as an optional rider for $9.53. Okay. It's going to be what's called our unlimited preventive benefits plus rider, or preventive benefits plus rider, which is going to include both unlimited preventive care as well as access to silver and fit. Right. I know that there's a couple of carriers out there that still do silver sneakers, silver and fit. That just seems to be one of those benefits that's kind of dying on both sides of the Medicare vine. But one that a lot of customers like, right? Just that added value of, oh, cool, I got my meds up and I get to go to the gym for free. And there's a whole bunch of other great wellness benefits. But to me, even more important is the unlimited preventive care side. Again, important to understand that relationship between Medicare and Medicare supplements, where if Medicare doesn't approve something, Medicare is not going to pay towards it. Therefore, the supplement's off the hook as well, right? General understanding of how Medicare and supplements work together. Well, with Physicians Mutual and our preventive care benefit, we are the exception to that rule. Okay. Now, Wisconsin is the one state, they're kind of crazy with a lot of stuff. But Wisconsin, they do have preventive care with other companies above and beyond what Medicare approves. However, outside of the state of Wisconsin, we are the only company that I know of that does this. And what it means is, if whatever they have done, the customer has done, is coded as preventive, regardless if Medicare approves it or not, Physicians Mutual is going to pay 100% from first dollar. So even if you have that high deductible or innovative plan, if it's preventive, it's not going to go towards that out-of-pocket max. We're still going to pay it 100% from first dollar. One of the most common examples that I use is something that most people are used to doing regularly, which is going to have a full physical with blood work done annually, right? Now, You may be familiar with Medicare's Welcome to Medicare visit. You may be familiar with Medicare's annual wellness visit. I don't know if it still says it in Medicare and You, but a year or two ago, when you looked those up in Medicare and You, in bold print, it said, these are not physical exams. It's a consultation, it's a visit, it's a discussion. Okay. But if your client wants to go in and have a full physical and have some preventive blood work done just to make sure everything's where it needs to be, it's always made me scratch my head, because you would think if Medicare approved that, they'd pay a lot less on major stuff in the back end, but they don't, right? So that's another reason that Physicians Mutual does this, is to try to keep our blocks of business as healthy as possible. So, man, if you look at that nationally, that's about $1,000 benefit. So when you include that in your quote for Physicians Mutual, now all of a sudden, even if we're a little bit more in premium, if your customer's using that wellness benefit, not to mention, the silver and fit, with that added value, total cost, we just became the most cost-effective Medicare supplement in your area. Okay, so again, just looking at premium to premium, you can't fairly do that with Physicians Mutual, because we offer products, benefits, and features that no other Medicare supplement carrier offers, that I'm sure that if you're not talking to your clients about already, they would be very, very happy if you started. Okay. So any more questions? I think we've been doing a pretty good job of keeping up with the chat and the Q&A. Can we use estimated premium comparison on the slide with the client to show the difference in premiums for life? You can, but what would probably be better, Jim, is if you went ahead and did the math yourself on the premiums in the area or areas that you like to work the best, or that you have most of your business, most of your clients in, and that way you're showing maybe a little bit better comparison. However, we also do not only in our Medicare supplement brochure, which some of these slides were snapshots from our brochure, but we also have a separate Innovative G flyer, customer facing flyer, that goes over an example of the cost savings, goes over an example of how long the deductible lasts, different things like that. It also has a little QR code on the top right that you can click, or your customer can click on, and they can actually watch a little 2.5-minute Innovative G video, just kind of hitting the highlights. So definitely available out there. Faux show. All right. Excellent, Jim. You got any issues, man? Shoot me an email, shoot me a text. We got you, buddy. All right, guys. So real quick, I know Mike said I could go over, so I know we've already lost like a quarter of our people, so y'all hang tight just for a couple more minutes. Wanted to show you our dental. So I know, being in the industry for a long time, this will be my 20th year. Fortunately, all of that time has been with Physicians Mutual. But if there's one thing that I've heard about dental insurance, I don't think it's worth a poop, or I've never found a dental policy that I would buy for myself, so I usually don't sell it. It's not worth the hassle. All of these different things. All right. And I'm going to go back and answer those couple questions in the chat in a minute. I just want to get this out of the way. So same product availability map, nothing changed, but you can see that we do have our dental plans in many states, all the states where we have MedSup, and several where we do not. Okay. So just hitting the highlights, guys. Dental, don't make it complicated. This should be the easiest cross sale that you have in your portfolio. You want to talk about making up some dollars from the non-commissionable PDPs, start selling Physicians Mutual's dang dental insurance. Again, it is just so easy. And especially if you're selling the MedSup with Physicians Mutual first, to be able to offer a 5% discount on the most comprehensive dental plan available on the market. It's shooting dang fish in a barrel. Okay. So real quick, guys, This is a PPO, okay? We do have 4 different plans. All plans are PPO. Obviously, that means that they can go to any provider they want to. However, if they stay in network, just like with the normal PPO, they would get more bang for their buck. We do use the Emeritus Network. It's a true physicians mutual policy. However, it is the Emeritus Network. So you'll notice if you're searching on our website to find a dentist, it's going to pop up Emeritus. If you call a dentist, don't say, hey, do you take Physicians Mutual? Ask them, are you part of the Emeritus Network? Okay. And still, sometimes those gals, I say gals, but the people in the front, they just don't know they're behind from a hole in the ground. It's crazy. Dental offices have no idea about networks. It's unbelievable. But average of 36% savings on covered services by using that Emeritus Network nationwide. So really, guys, the only difference between the 4 plans is going to be the premium and what we pay per procedure, right? Everything else is going to be the same for the most part. So what are we going to expect from each plan? When used in network, we will pay 100% for preventive care, okay? Preventive and basic both have no waiting period. Those are immediate benefits. Major benefits do have a 12-month wait, okay? Now, you'll see why in a minute. We will not waive that waiting period if they've had other coverage, anything like that. I know that some carriers do. Bottom line is, our benefits are just too rich to give away from day one. We'd go broke, okay? Now, I will say, though, even if it's a major benefit, if they go in network, they will still get that 36% discount on those major services from day one. So keep that in mind. Even though the plan might not be paying towards it, they will still get a substantial discount on those major benefits from day one. Unlike most plans, we have no deductible, and we are the only individual dental I know out there that has no cap on our benefits. Okay. Now, there is a caveat to that. We do have one benefit that is capped, that is implants, that is specific to the actual post itself. So extraction, crown, all the other stuff that's going to be done around the implant, that would fall under the no cap. However, for the actual implant itself, it is $1,000 lifetime max. At some point after your customer signed up, they will get a rider offer in the mail for a couple of bucks to increase that to $2,000 lifetime max. Okay. So looking at the 4 plans, again, don't make this complicated, guys. Don't make it complicated. Lead with Premier. Well over 80% of the few thousand dental plans we sell each week is Premier. Okay. Now, if they balk at the price, you've got the preferred standard economy to fall back on. Okay. Easiest sales pitch. Again, Physicians Mutual has the most comprehensive dental plan that I know of on the market. Their Premier plan is their most comprehensive and by far their most popular. It is going to be a PPO, so you can go to any dentist you want. However, if your dentist is either in network, we're able to get them in the network, or you're willing to find a dentist in network, it will work better. Those in-network benefits with preventive care is going to be immediate at 100%. So that's going to be your exams, cleanings, x-rays, so on and so forth. Basic treatments, cavities, things like that, fillings, that's going to be 70% right out of the gate, okay, in network. And after 12 months, your major benefits, things like crowns, root canals, those are going to be covered at 70%. Again, after a 12-month wait, there is no deductible and there is no cap on the benefits, okay? Now, depending on the market, guys, premiums on the Premier are going to range from $56 to $69 a month, which even at the $69 price point is still phenomenal for 70% at no cap. Okay. So you can also add vision and hearing for $8.95. Do you want that Premier plan with or without vision and hearing? And by the way, since you just did your MedSup with Physicians Mutual, or if you plan on doing your Medicare Supplement Physicians Mutual, we can save you 5% on that dental premium. Okay. So if they balk at the premium, again, preferred standard and economy all still pay a true 100% across the board for preventive. Basic and major, those are rough percentages at 55, 40, and 25. I say rough percentages because for basic and major under the preferred standard and economy, these are actually going to be set dollar amount per benefit. So more of a set dollar amount indemnity type plan, still no deductible, still no cap. We just took those set dollar amount, compared it to the national average maximum allowable charge, and came up with a little bit easier to explain percentage. Okay. The preferred is $46 a month. The standard's 38 and the economy's 30. Which one makes most sense for you? And do you want to add vision and hearing? Okay. Again, should not be complicated, guys. Vision and hearing come as a bundle that is a rider, so it can't be sold separately. Eye exams up to $100 per person per year right out of the gate. After a 3-month wait, you can do your glasses, your contacts, all that, $150 per year. On hearing exams, $75 per person. And then after a 12-month wait, $500 per hearing aid per ear. And that particular benefit does reset every 5 years. Similar to the dental, they can go anywhere, but just like the dental, getting those discounts with Emeritus, if they use a VSP network provider, they will get discounts on that vision as well. Couple more slides and then we'll answer the remaining questions. Thank you guys for hanging on. So a lot of agents ask, is this just for seniors? The answer is no. We can do an individual plus spouse, one parent or all family. When it comes to the one parent or all family, whether it's one or multiple dependents, that does not affect the premium. We can do it with or without the vision and hearing, and we can do it with or without that Medicare supplement discount. Most states, they can stay on as a dependent up to 18. A few states go up to 26. And there is a dental reference manual, not something I suggest you bust out in the appointment because it is a multi-page manual with the 400 plus different procedural codes and where they fall and so on and so forth. But as it says, a good reference. Okay. All right. So let me stop sharing my screen. All right, guys. So I know we had a few questions in the chat. Let me see what I missed out on. Let me go back up here. Sorry, late to the meeting. All right, Steve, how many years does the Innovative Plan G policyholder pay the secondary deductible? Steve, so the best way to look at it, brother, is they're going to have it for the remainder of that first year, followed by the next 2 calendar years. So worst case scenario, 3 full years if it's a January effective date. Best case scenario, 2 years and 1 month if it's a December effective date. How is it durable medical equipment like this? CGM for diabetes. I'm not understanding Tim's question.
Yeah, I'm not sure either on that, Tim. I'm sure DME just billed the 20%.
Yeah. That's what I was
be.
thinking. Yeah, I was thinking, yeah. So however it falls under Medicare, which it should fall under Medicare Part B, after they've met that Part B deductible, then it would be that 20%. How does physicians, because that's the other thing, regardless of the supplement, it doesn't change how Medicare operates, right? It just changes the secondary payer. How does the physical exam get billed? Does it get sent to Medicare, then to PMIC? It really depends, Jim. So if the provider is willing to file it, then yes. Otherwise, your client just gets you a receipt. We send it up to sales support. Sales support uploads it. Underwriting reviews it, and then we cut them a check reimbursing them. If someone had previous coverage, they still have to wait 12 months for major. Yes, we covered that. Again, 70% with no cap is just too rich to give away from day one. I understand there are now over 700,000 providers in the Emeritus network. Yes, it has grown substantially. I just need to update that slide, Deb. Just had a crown now, waiting on a 1-year mark, estimated physician mutual network rate. There you go. I like a savings of $500. Nothing wrong with that. Surprise Dental isn't available in Nevada. So Rick, we do have it. Well, we had it available in Nevada up until March 14th. What happened was when we came out with this more comprehensive 4 dental plan portfolio, every other state but Nevada approved it. So we've had our older dental portfolio in Nevada. And from what I understand, we just got tired of fighting with the DOI to approve our new plan. So we just decided to pull out because it wasn't profitable enough for us. So I'm sorry, man. If you want to blame anybody, go talk to those folks at the Department of Insurance. All right. And then let's see, innovative G premiums. What if they are disabled and Medicare eligible prior to 65? I'm assuming their rates are substantially higher. with other carriers. Yeah, so it really just depends on the state, Rebecca. Some states offer, plans under 65. Some states don't. Some states cap the under 65 plans at no more than 200% of the T65 rate. Others allow the insurer to price it for whatever it needs to be priced at. I know, like Texas, for example, if you're not in stage renal or ALS, you only have the Plan A available. So a lot of that's going to be state specific. Um, yeah. Oh, yeah. 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 So you offer under 65 and they're substantially higher, and they have to be simply because, carriers know that they're buying claims right out of the gate. I know
Hmm.
Nevada and Texas recently had come out, I think it was last year, with some under 65 stuff, but capped it at 200% of the over 65 rate. And for a lot of people, it was GI coming over. So I know that had an effect on some carriers' rates as well, rate increases. All right, under the Q&A, excuse me. Peter, do you foresee physicians offering an innovative for those individuals turning 65? Okay, we already looked at that. Already looked at Jim's questions.
Hmm.
John, so pitch the dental as emeritus and not physicians mutual. I would pitch the plan as physicians mutual, but make sure that the customer understands the network is emeritus. And I know a lot of times I'll talk to agents like, well, I called so and so and it showed in the network on the website. When I called them, they said they don't take physicians mutual. So, well, did you ask if they take physicians mutual, or did you ask if they were part of the emeritus network? Oh, yeah, I just asked about physician mutual. They called back and they're like, oh, no, yeah, they are part of the emeritus network. Yeah, I'm hoping July for Virginia, brother. I really am, James. Virginia was a funny story. It took forever to get all of our products approved in Virginia. We got in there and started selling a whole bunch of med sups, and like 2 or 3 weeks later, the department came back and said, "Well, wait a minute, we need to take another look at this innovative thing." So they pulled our whole portfolio back, and that was like almost a freaking year ago. So who knows? Who knows? That's one of the frustrating things on I agree, Linda. Yeah, that's one of the frustrating things on the med sup side is, it's governed by the individual states, the departments of insurance. So you've got different states playing by different rules.
Yeah, it's the joke is you don't have to be good at your job when you're the only one doing your job. So
Yeah.
they can take their sweet time.
There you go, brother. There you go. Man, this was a wonderful interactive training. I can't appreciate you guys. I can't tell you how much I appreciate you guys. Should I say that way? So often you get on here and nobody says anything, and you're just talking away. You're wondering if everybody fell asleep, and we went like 30 minutes over and still retained over half
Hmm.
of the crowd. So this
We hold a
is.
cat and puppy hostage if they log off too early. So
Yeah,
yeah,
Rick, I think that who was it? Was it Rebecca? Yeah, I think Rebecca was referring to the underage 65 rates.
yeah, that nobody wants. I mean, nobody wants someone like Trevor said, it's a walking claim. So I mean, they're forced to take them, but I guarantee if states said, "Hey, no more under 65 subs," that market would be barren.
Absolutely. Yeah. If carriers could figure out a way to get out of the under 65 in the GI market, I can promise you rates would be way more stable.
Hmm. Yes, absolutely.
Way more stable.
Yeah, and I've got Trevor's contact information. I'll be happy to share that in a post email. Do you want to type it in the webinar chat area, Trevor, just so people have it?
Absolutely. 37 350 163 and
Probably one of the most responsive reps I work with. So can't say enough positive things about him, not just because he's here, but we don't give that big compliments here at Gordon Marketing. So he does an outstanding job. The company's solid. I mean, we're very particular on who we bring on these things because we want to make sure no one's bored. And he did a fantastic job, Trevor. Thank you so much.
I appreciate the heck out of it, brother. Thank you. And Trevor, only issue is crappy shirts. Come on, Rick. I don't know what Rick's talking about over there. Are you referring to my wonderful shirt I have on, or my beautiful jacket? I think you're just jealous, Rick. Come on,
I
Rick.
mean, that's how they save money on premium, but by using the Timu of jackets. So what are you going
There
to
you
do?
go. Hey, this was bought at Target, okay? And it
Okay.
was a gift. It was a gift. And don't forget to tell the people, man, if they're not already contracted, they need to get stinking contracted.
Yes. And guess who has a contract? Oh, Gord Marketing. No kidding. So
Hey, would you look at that?
we can definitely take care of you. But yeah, Trevor, I'll let you have your day. I've got to run to my next event, but thank you so much. We'll send out the recording. Trevor, send me all the materials. We'll get that out, make sure everyone has it, and you'll be all set. So